10-20-20 S&P 500 daily snap right here on that daily. Yes, we did. We went up. We made another high. Oh, yeah. 33.63. We got right up there. And then in the morning when we opened, you can see that long wick on that daily that came down, and the daily low when they hit that was 33.35, and then bam. And right now on the daily, we were there at one point at 99% overbought. And one of the things that we're looking at is how the CCI channel is turned. Not only got many things in that fast stochastic, actually that was a little bit bigger than what that number is slightly. And it is a topping process. And particularly when we go back over to the weekly, which is only one day, and that's today. But I will tell everyone, we are at that snapping point. And one thing about tops is the great bull market had a big rotation today, and it did. And they were looking for beaten down stops, airline stops. They were, fishing for some of the other stuff, Deere, Caterpillar, Dow components. That pushed the Dow higher that no one had been bought in. The Dow is not even close to being overbought. Like that NASDAQ composite and that NASDAQ 100 really got torched again today. And there was nothing but red across the board on all the big good stocks. Oh yeah. So they went hunting for those kind, and that had a little bit to do with keeping the S&P 500 up here in this snapping point in what we call the overbought zone. And you get to these things until they just are at the stage, and like I have said many times, is that blow off tops, a staging top. There are 4 stages, and you always go through the low volume futures after hours market in the E-mini S&P futures. And we got up there, and we were less than 1%, about 1% from an all-time high in the S&P 500, and that would be getting back to the all-time highs. Now, in our view, when you get this overbought, yeah, you can shoot up there a little bit, and you can, but it's a good place to take profits. So as this rotation was going on, they were selling the big tech again, the software and good stuff, good stocks. And they did. And those are always going to be the good ones for the pullbacks in that NASDAQ 100. But we're talking about the S&P 500, which here on the daily chart, you can clearly see on the weekly, 98 by 99.5. And when we do take a look at a monthly, because we know what normal levels are in normal bull markets, because we've been around, and that CCI is up there at the high still. That's that green line, commodity channel index. And it is. And this overbought level, which is extremely overbought, that's a 97 on the past one, when we start entering that. But when we look at the core component, is the blow off 52-week high that the bull market in this index, it's just due for a pullback. So that markets set up for new money to come in and buy the things that we've seen today that got sold down, that are going to set up real nice and whatnot. But when we're looking at overbought, you don't want to chase the highs when they're at these levels, is what I'm really reiterating. And I'm reiterating a cautious period. And yes, we could trade up to 33. You know, we could pull back. We could pull back first, or we can run up. But the more overbought, you can't get that much more before the rubber band before the rubber band breaks. And once the rubber band breaks, remember, every great bull market has to have one thing: shake out the buyers. That's what bull markets are famous for, and that's what we're going to be waiting for here with these overbought levels. Is that I can't say exactly what day. I can say that each time it inches up a little bit to my next point of resistance, it's just going to get harder and harder to take it out, and then bam, somewhere in there it'll be an event. I mean, the stimulus and vaccine, the markets have basically pricing in a vaccine to get us this overbought in the S&P. And remember one thing, we're not bearish on the S&P. It's overbought. Now, there are stocks that are in the S&P that can move it and inch it up a little bit, but it won't have nearly the impact of the big five. The Amazon sells down more if we can get some bigger selling again, and we can see where the SOX index and things that are heavily weighted, like the Apple trade, that would help bring that S&P 500 down. So basically, with red alert, blow off tops can go through a process, and there are 4 stages to them when I started talking about it over here. And I did. Today is this Monday, but so that's all this is today. And today's move that we did make another high in the S&P, baby, but it was done on light volume, and it was. And so there are stocks that were being bid up in the airlines that help keep that S&P up. The thing that I will give the red alert about is that with the kind of selling that I've seen today, and more broad-based selling in the NASDAQ 100, as it's entering its overbought, and it's had a couple of down days now, and it has. And so that correction in those stocks that we like, all the big ones that we make markets with, oh yeah. And I can tell you that there's a lot to talk about, and where that selling was, and it's all red, and it is. Those are the real bull market stocks that are pulling back right now. So, as we know, that rotation can have an impact on an overbought S&P stage. And then once the buyers dry up, of course, there isn't anywhere but to go is down. And that could happen. It could be a headline event. Who knows? It could be profit taking, where when you're right below the all-time highs in early 2020 and whatnot, and you had made highs when you'd moved up from there, and then it all went away, and now we finally, after all of these months, it was the S&P 500 that was very late to the rally. So, any more distribution in the big ones that basically have a bigger weighting in the S&P would give that S&P a good pullback so that it's not overbought, and it would provide new opportunities. Red alert, overbought. We are in the second stage now. We could go into third one before the rubber band pops.